tariffs can impact in the very short term. You can just flip a switch and tariffs are on, whereas supply chains take a very long time, especially at scale, to move. And so my original background is engineering. So I always kind of look at things from a pretty tangible perspective. It's easy to kind of sit in New York or sit in Washington and kind of look at everything, numbers on a chart. But when you actually are moving facilities, moving logistics hubs and things like that, that's actually a really time consuming thing. So in the near term, it's likely to be inflationary and disruptive. Longer term, I think the best case scenario is it can kind of signal a priority shift. In that paper, The Economist covers not just the tariff side, but also, ironically, trying to discourage the rest of the world from stashing all their excess value in U.S. financial assets and overvaluing the dollar because of that. So it's kind of like this 1-2 punch of trying to make imports more expensive and then also trying to discourage excess capital recycling. So I think it's a potential turning point, and I started writing about that last year. Before all the tariff stuff came into effect, my initial catalyst was the U.S. was entering a rate cutting cycle. And so it'd be the first window since 2019 that could be a catalyst for some of those capital outflows. Now, 2019 didn't really end up doing that because, within a year, COVID hit and the big U.S. network effect tech stocks, really benefited from that. And also the U.S. did more fiscal and kind of came out a little bit more explosively than the rest of the world, while China and other places were still kind of in contraction mode. And so that didn't work out last time. And so my kind of framework is this is the next window for it. Now, a window doesn't mean it's going to happen, but it basically means that it's one of the first higher probability areas in a while. The area of my portfolio that has been more challenging has been expecting a little bit more of a rotation earlier. So I've been early on that trade. So I'm always a little bit cautious to say, okay, this is the big rotation, because I'm mindful of the difficulty of making that call. But I do continue to hold the view that it's more likely than not that this is early sign of a rotation, because there are a number of things there. There is the initial rate cutting period. Then there's all the tariff uncertainty. Then there's the fact that I've been emphasizing China because they've been in a balance sheet recession for a while. They're trying to deflate their property market, and kind of deflate bubbles there at kind of a gradual pace. But last year they started to hit certain pain points on Chinese social media. They were, it was starting to come up, and then they were starting to hit red lines in the equity market where their kind of priorities shifted. And so my view was that they weren't going to come out with some sort of hyper stimulus, but that they're going to come out with a series of smaller ones whenever they keep bouncing into these red lines, and that they're starting to put a floor under things rather than a ceiling over things. And so when we see, European fiscal open up a little bit, not necessarily for great reasons, but European fiscal opening up a little bit, Chinese consumer stimulus opening up a little bit, while at the same time the U.S. is still being fairly tight with monetary policy, while also around the margins trying to contract fiscal. And then you add tariffs. It's a pretty good recipe for the rest of the world, especially because there's also that big valuation differential, and everybody is on one side of the boat, stuffed overweight into U.S. markets. Social Security was basically pretty big cost of living adjustments and the pretty top-heavy demographics that's pouring out into the economy. Even interest expense is pouring out into the economy, which is spendable around the margins. And so defense spending isn't some rapid effect stimulatory thing, but it does trickle out to all the people that work in those supply chains and their spending power and their employment. And so in the marginal sense, we can say that basically Europe's going from kind of low fiscal to maybe moderate fiscal, while the U.S. isn't really increasing anymore. And so on the margins, that fiscal difference has narrowed. And so I think you do get a similar effect in Europe, just maybe smaller. The issue is that the vast majority of the spending is these really big buckets that are hard to cut. So Social Security, Medicare, interest expense, defense spending, veterans benefits. And if you look at even, for example, back in the Paul Ryan Republican era, so that, the past decade, they were trying to reform Social Security, Medicare, raise retirement age, trim things, potentially privatize some of it. Whereas in kind of the Trump version of the Republican Party, if you look at 2024 GOP platform, Promise 24 is don't cut Social Security or Medicare, and don't raise the retirement age. So the optics are the idea that there's a lot of government waste, a lot of employees, and you can start trimming that. And while you can rack up a lot of these like optical wins or dramas, depending on what side of any given issue you are, it doesn't really eat into the biggest things on the pie chart. Probably the only area that is big enough, discretionary speaking, is defense. But then the issue there is every single congressperson who has some program in their jurisdiction is going to fight tooth and nail to keep it. So you have to go through all that. Let alone the fact that outside of defense and outside of all those big transfer, like those transfer programs, we look at like FAA, Department of Education, XYZ, all those are like little tiny slices on the pie chart compared to those really big things. There's that he posted on Truth Social that they would have Bitcoin, Ethereum, and then the three others. That got some backlash, not just among Bitcoin proponents, but also some CEOs of major exchanges that are involved in multiple cryptos. There's one of the projects in particular that is not well liked by the rest of the space, and that's probably what encouraged some of that backlash. XRP is particularly controversial in the space. The way that the executive order actually came out seemed to include or take into account a lot of that criticism and probably behind the scenes lobbying, which is they separated Bitcoin from other crypto. So Bitcoin's part of a reserve, whereas the other crypto is part of a stockpile. And those two pools, at least as far as this executive order remains in effect, it could be undone by a later executive order, either by this president or a later one. But under this current framework, the Bitcoin is instructed not to be sold, and that Besant and Lutnick are authorized to find budget-neutral ways to accumulate more of it. That's how it's worded. Whereas the crypto stockpile, the Treasury Secretary, so Besant, has discretion on how to handle those, which could include sales, and that they're not really meant to accumulate more other than through the normal course of seizures and forfeitures, which is how they have all these holdings in the first place. So I actually think that the executive order came out better than it could, because instead of going out and buying, crypto XYZ that probably passes the Howey test and makes certain insiders and VCs rich and was pre-mined and, has an issuer, and it's kind of like if the U.S. picked certain stocks to own and not other stocks to own, that's rife with all sorts of conflict. I actually think that they separated out pretty well. And, the thing I wrote about before this all happened is that my base case is they ring-fence the Bitcoin they already have, which is basically what they did. They're capitalizing it with the Bitcoin they already have from seizures and forfeitures. They'll see if any of those should legally be returned to certain entities. There's a particularly big bucket of those that is, probably owed to an exchange that, they got hacked. It's not really, they weren't involved in criminal stuff. So we'll see what happens there. But other than maybe that big chunk, I think they hold that. They might accumulate a little bit more. I generally take the under on the idea that they're going to go out and buy like 1 million Bitcoin, as some of the proposals have said. So I tend to assume that it'll be roughly the size it is now, maybe a little bit larger, because they probably want to get some optical wins of, hey, look, we sold this crypto and we put the proceeds toward a budget neutral acquisition of a little bit more Bitcoin, or we did this and we bought a little bit of Bitcoin, but we'll see. Their policy before was to gradually sell the coins they have. And so merely not selling them is
says we'll hold it.
Yeah, it is a tangible change. It would take a reversal to undo that, which is not impossible, especially if you get a different administration. It's a ton of free marketing, so a lot of that is just optics. But then it's also like the fact that they did differentiate Bitcoin from other crypto, I think was good. It could have turned out more problematic, more prone of conflicts and things like that. The fact that not selling it is effectively the same as buying it is true, which is why I mentioned that this is not just an optical change. There actually is substance to it, because it involves either not selling or selling potentially hundreds of thousands of coins. And so that's fully true. It just means that the purchases were essentially already made. It doesn't mean that more purchases are coming, but they're still effectively purchases in that sense. And it's also true that it's not like oil, where the U.S. could find itself suddenly deficient in Bitcoin and needs Bitcoin. I think there are other countries where it can serve a more strategic purpose, which is that if they're worried about getting cut off by sanctions or things like that, but they even just for the fact that they could make a payment to another nation, that settles in a half hour with multiple, under multiple blocks. That actually gives them something. Whereas if you are the U.S. global reserve currency issuer, then effectively what the value you're getting is it as an investment. So in that sense, it's not like oil; it's more like the gold holdings. And then the question is it worth adding to our gold holdings? Is it worth adding another kind of monetary-like asset to that? Now, the part that I would see a little bit differently is it's not quite the same as holding 5 stocks the presidents like, because Bitcoin doesn't pass the Howey test, so it's effectively a digital commodity. It's an asset without an issuer, and so I do put it more on gold in that case, with the caveat that it's still a fairly small asset, and this does obviously benefit those who hold Bitcoin or that are bullish on Bitcoin. So it does, potentially help certain constituents and not others. And as you point out, many of them did lobby for it. And so I don't really disagree with that part, other than to clarify that I would see a big difference between them doing it with Bitcoin versus them doing it with like crypto XYZ that literally had VCs, founders, a pre-mine, insiders, things like that. It is somewhat different. But at the end of the day, it is basically just an investment decision. If Bitcoin should over the coming 5-10 years go up 5 or 10x in price, then they have effectively made a good investment decision. Whereas if it stagnates, if it goes down, then it will have been a waste. Now, I think at the scale that they're doing it on, it probably gets disproportionate attention, in the sense that, they're not saying, hey, we want to go out and accumulate trillions of dollars with this. They're basically saying the couple $100 billion we have, which is, a month or two of fiscal deficits and a pretty small fraction of the gold reserve. So it's kind of, I think that there is controversy to it, but I kind of put it on small enough potatoes that it is what it is. And it's a little bit different than a security.